Hello, and welcome to Urban Hood Money Talk. It's a fact that we need money to enjoy life and focus on the things that we really like. I'm your co host, Allie, and I'm here with Mushi Buyan.
Hello everyone, thank you for watching the video. I am Mushi Buyan. I will be sharing what I know. I'll be your host for everything I am sharing is educational purpose only. Please do understand and read this disclaimer if you can need to pause the video. So Fed wanted to keep this rate hike around 5% or above. We'll see it, but the range is around 4.75-5%. Did you know that Fed may pause that whole the tightening, their rate increase tightening next year? Based on the numbers we are seeing, it looks good. So hopefully we will keep our finger crossed. Last 8 months they increased almost 4%, and there is another 0.75 or 5 or a little bit more based on the economic data. We'll find out. So please do know that the rate Fed wants to be around 5% or 4.75, and they will pause the rate hike once they see that other economic data slow down. So keep an eye on this one. Uh, this is the data what I was mentioning here. This 7%, and the last 8 months they increased that. If you see the chart, this line, um, this one, you see this one, it tells you service inflation, and the other one the goods and the products. One's service part, one's the good part. But if you look at from 1990 till 2022, you'll see the clear picture. You'll see the clear picture that it went like almost like a V shape. It went all the way here, and since earlier this year, slowly our the goods inflation is coming down, and as well as services started. If you look at the services here, it took peaked, but it started trying to started shifting that downwards. So hopefully that's a good sign for investors, and hoping that it will keep the momentum, and hence we might be able to see there are more good news in the market. This chart, what it shows you the price paid in advance for advanced 6 months. Here the one is showing you price chart. Here this one is price chart plus in advanced price chart, and then CPI. The other one is showing you CPI year over year. If you look at this also gives us some good strong indicator. At some point this year slowly price paid in advance is slowing down. Companies are figuring out limiting the cost of products goods is going down, hence price will be slowly going down. That means CPI might also cool down. And we know that Fed wants to keep the CPI around 2%, but at least it's a good indicator that things are coming down. Hopefully in future we may see that Fed might put their foot off the tightening and maybe pause for a while. We'll see. So what's the takeaway from the last week? The CPI data came up, and then it gives us the CPI data gave us a good indicator. PCI, CPI, inflation data also gave us a good indicator that things are slowing down, and from that means in December maybe it might be a 50 point increase, that what Powell mentioned. Fed will want to see this kind of slowdown, and the success what we have seen this week or last week is next few consecutive months. If that happens, Fed is ready ready to do their pause the current market, and hopefully that will give us some indicator that what might happen. So are we in the bottom? People do ask for, are we in the bottom? Is this it? For short term, no, we are not. For long term, maybe. If you look at the current market recovery, it may not be the same as what we have seen before in 2020. In 2020, when market came down all the way like this, and then it had a recovery like that V shape. But in this year, the way all the things happen, it looks like our recovery might be like U shape. We do not know that in the bottom, we are at the bottom yet, because it's still, you cannot tell. But it might be an indicator for us that maybe is at the bottom, or we are close to it. If that happens, you will see that money is shifting from different sector and going to in the sectors that investor believe in. We know there are big cap, blue chip stock got big time hammered. So slowly that you might see that the some of the investment going to come out from bond market, and others investor might be getting into an equity market again, based on the next few months progress we see. Okay, so how are we going to find out? Very early next year, we will see that in month of December, that what Fed is doing, and then it comes to next year in March and so on. Are they going to be increasing, or they are going to be put their pause and just see, let the economy recover by itself? Okay, so that's my takeaway, and I'm hoping that some those who is thinking what's gonna happen, we'll just take one day at a time, one week at a time. If you're a short-term investor or trader, just just hang in there. Don't just put all of your money in invested. Just have some capital allocated in case market uh, pullback, and then so you can take advantage of the pullback. Okay. Okay. So what's happened last week? We have seen that S&P did a very good 5.9% growth, and same thing what we see, the biggest growth happened Nasdaq has had 8 point. If you look at 8% up, so last year, not last year, this year, since March, this is the biggest gain Nasdaq had in one week. So this is good that for short term, but look at the long term. Long term, Nasdaq is down 27%. We know that if recession comes, inflation happens, what happens? Growth companies, especially tech heavy Nasdaq companies, got punished a lot more. So maybe some of the stock or business that you believe in might bottomed out, and if you truly believe in, just do your research, be ready to take advantage of this current pullback. Okay? And then S&P is doing not bad, 16%. We know that one of the biggest the upside for S&P was is 4900, or no, sorry, 4100. If S&P can goes above this 4100, we know it's ready. We are truly getting into the bullish market. Else, it might be still currently all the gain what we have seen might fade away. So be careful with this current movement. We still have a lot of unknowns to know what's gonna happen next 2 months and early next year. Okay. So what's gonna happen next week? So sometimes people ask me, and also I don't know. I cannot tell. I'm not a fortune teller. However, those who is doing short-term trading or looking at technical chart analysis, you might see there are opportunities that might give you some ideas. So I'll share with you some of the ideas that I am thinking, and then I may take advantage of this volatility this coming week. First of all, we see that earnings is happening in most of this retail and staples business earnings going to happen Monday. Monday, some of those companies, what I'm looking at, not really much any of this business that I am looking at, except maybe Tyson is one of the one that I'm familiar with it. So I'm not playing with any of those or invested in any of this business on Monday. But Tuesday is Walmart, Home Depot is very good in a company, two of them, and we have seen the Home Depot reorganize their business and upside. There might be some, both of them might surprise us. So be ready for Tuesday before the market open, and after the market open, there are okay, black box. And none of these businesses really I am familiar with much and will be watching. But Wednesday is the one I think, Target and Lowe's coming in, and TJ Maxx. We have seen in the past Target had a big loss in the last quarter and surprise. So we'll see what Target is coming up. So that's something that we will be watching on Tuesday. And after the market close on, sorry, on Wednesday, market close, Nvidia is making noise and trying to recover. So we'll see what they are doing with their earnings. And Cisco is another one we'll see in the technology side. But Thursday, the before market opens, Alibaba, one of the big surprise that many of you looking at, is going to release their number, and Macy's, Kohl's, BJ's. So you can see that all the defense staples that is going to be releasing this coming week their earnings. So that may impact market a little bit, and just be ready, with this current market. Short term, it might have a little pullback. Foot Locker is another one on Friday. They have been doing very well in this current economy. We'll see what number they're releasing. All right. So there are still some good earnings that we can keep an eye this coming week. And then what's there to watch out? So economic data, more economic data is going to come out this week, and we'll see if it keep the momentum going. Inflation data, some of those consumer credit, some data might be coming up, and then the manufacturers data also. Some of the data going to come out for the month of October. And then the other things need to keep an eye on elections, that is still is Senate or House. Both of them are in the limbo, not knowing which party is going to be in charge of next 2 years. So we know that the some of you may not be in the big fan of divided government, but at some point it is necessary based on what we are saying it. So we'll find out more this coming week. Is Senate is going to be still held by the Democrat, and House is going to Republican? Are we having that and that divided government? And then there will be gridlock, and some of the fade away might happen with again what we have seen. So short term, the squeeze might happen. One of the thing we have seen that last week, a lot of institutions selling put. So they're selling short term put. They're thinking there might be more volatility. So they collected some of the good downside squeeze. So this coming week they do it. They might close some of those put. So watch out, just shorting short term, because anything could happen. Then This coming week in the ideas, few ideas stock I'm looking that I'm investing for short term and long term. The Tesla, the Disney, and the other one, the BKI. So with the Tesla, I will open up and just share with you some technical. These three again, know these three ticker that I'm going to be looking: Tesla, Disney, and BKI. What I have seen that as the market was pulling back, institution was keep adding their position in these. So although technical may not give you exactly what I am saying, what I'm learning, but I see that big money is going in there. So I'm hoping that if I keep an eye on this, it might give me some short term gain, and for next this coming week. And on the bear side, what I've seen, um, these AEM, AMAT, some of those who already invested in them, that I see that they are pulling out. So be careful that on those stock who already has its stock or options, that this coming week, some of the pullback might be happening. So I am seeing bear on these three: PG, AEM, AMAT, those three ticker. So now on the technical side, let me show you that what I was looking at when I saw the QQQ. You can see that the Nasdaq last few weeks it was around over 300, but last 3 weeks although we feel like it did uh, something movement, but you see the last 3 4 weeks Nasdaq is kind of staying within this range, you know. So those who is doing is option, that is kind of killing your premium, based on the if it stay like this, right? So be careful on that. But on the daily, yeah, it showed it's some good momentum last week, last 2 days. So we'll see if it's ready to go above 300 QQQ Nasdaq. And SPY, look at the S&P. We have seen that SPY had last few weeks, it has from bottom around 340, 345. Last 4 weeks it has a good momentum going up, and we know around 400 is SPY is one of the big resistance. SPX is 4100, 400. If it goes above 400, then it's ready to go above 420, 21. If it can go above 420, 21, 29 range, you can see 422, 5 range, then we are truly are getting in bear mode. We are in bullish market, and else we might be going through this bear trap. So be careful with the current short-term gain. Okay. So now Tesla, as you can see, the Tesla last few weeks, each day just came from close to 300 starting September. From there is now below 200. And you see that weekly is going down. What we noticed the last week, institution keep buying, as keep going down. There are a lot of buying happened last week. So that gives us an idea when there is a big divergence happens with the big money going in, we would like to be in that areas. So you can see that currently, although it looks like it's a bear trap and is bearish this stock, but because of that other catalyst that I'm familiar with, I'm learning that I will be playing more bullish on Tesla side for short term, although I have a good amount of Tesla for long term as well. But I will put my foot off in a Tesla going down more and just try to the see what happened on the short term this coming week. But overall, this coming week, I am bullish Tesla. I know that it did close around 195. This week 195.10 is the one Friday is closing. So we will see if Tesla can go above 200. If it does, that you can see that Tesla is ready to go. 206, 207 is one of the big 206, 207 big resistance for Tesla. Once it can bypass that, then it's ready to 10, to 11, then 220s and so on. We will have to keep an eye on Tesla, see what other things Elon is doing this coming week. Okay. I hope this is helpful what I shared with you. If you liked any of this content, and I would truly appreciate like the video, subscribe our channel, and like our the media, whichever media you're using, so we can create more contents like this to help you and learn and grow with us.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.